Yeah, so this panel, you can see it'll come up on the screen, blockchain disruption in capital markets. We have some just monsters in the space, I'll say that, that are working on this right now. So I'm going to step out of the way, and we'll start right here to my right. If you guys just want to go ahead and introduce yourselves and what it is that you're working on now and how it sort of relates to blockchain disruption.
Hi, everyone. My name is Mohamed Elkasstawi. I'm a partner at ZK Capital. It's a blockchain investment fund, research-focused, based in Chicago. We invest in different stages, from like early stage to tokens. Before that, I spent 4 years in private equity. And before that, I was an entrepreneur and sold my company in 4 years.
I'm Jesse Proudman, run a company called Strix Leviathan here in Seattle. We build algorithmic trading software for crypto hedge funds. Prior to that, I ran a company called Blue Box here in Seattle for about 15 years, sold that to IBM in June of 2015.
Hi, my name is Alex Aginsky. I'm the CEO and founder of a company called BuildingBits. We're based in Portland, Oregon. Launched the company a couple of years ago, and we're now live in the market, selling fractional ownership and commercial real estate. We're the only SEC-qualified company in the U.S. today that allows us to sell shares in individual buildings to virtually anybody, domestically, internationally, accredited or non-accredited investors. Thank you.
Can you hear me? Sorry. Hi, I'm Stephanie Vaughan. I'm CFO of Elixxir. Before that, I worked in capital markets on an online lending platform, like P2P lending. And we actually had a Reg A plus product, so that comes up a lot in the blockchain space. Before that, I did M&A for an investment bank. And before that, I was in the Marine Corps.
All right, that's awesome. Okay, so the first question I have is, very simple off the bat. Why are, and you can get detailed in this if you'd like to, but like, why are you focused on blockchain technology? What about that is something that you think is important for your industry?
So the disruption that comes with the blockchain technology, especially in emerging markets, for me, I came from Egypt eight years ago, before the revolution, and one of the things that let me actually invest in this market 4 years ago was the devaluation happening in Egypt in 2014, and the capital control of the Egyptian government, that you cannot take out your money, and you only have $50,000 per year that you can bring it out. So from there, I found that, oh wow, like this has been happening with a lot of countries, and government, and the inefficient in the government. So I think with the blockchain technology, it will help a lot of these governments to become more efficient, and it will fight a lot of the frauds that we see in different industries. And one of the technologies that's we've seen that's undervalued was like something like zero knowledge proofs. So that's why I'm very excited about blockchain technology.
So I'm actually not excited about blockchain technology. I think it's largely used incredibly inappropriately with most of the people that are trying to implement it. The piece that I am excited about is the currency aspect, the financial side of it, and that's sort of the one of the obviously the first use case, and one of that's sort of been around the longest. And to me, particularly coming at it from an algorithmic side or from a trading side, this is one of the first asset classes that traditional institutional investors have largely been kept out of due to regulatory issues, which has resulted in a retail base building up the bulk of trading volume for the last 10 years. That characteristic has created pretty unique patterns in the data, in the trading data, that I felt like could be identified and harvested to make trading decisions and profit off those. That to me, it's a big puzzle, and it's a big puzzle that hasn't been solved by the traditional sort of Wall Street firms yet, and it's one that is particularly challenging due to the immature infrastructure in the space. The exchanges and their infrastructure is primitive. The trading desks are primitive. So sort of figuring out all of those pieces, tying them all together, making that all functional into a product, that's pretty exciting.
So I am a fan of blockchain rather than cryptocurrencies necessarily. I think that there's a bigger case to be made for blockchain, but obviously there's some disagreement on the panel with that in that regard. But I am specifically in the real estate side of the business, so I think that asset tokenization lends itself particularly well to blockchain, more so than service-based businesses, although we've seen a lot of that on earlier panels today. I think that the best use case is asset tokenization and fractional ownership of whatever the asset might be that a Picasso painting or a large building or anything else for that matter, for a number of different reasons. So clearly the efficiency and transparency and chain of title that you get with blockchain is obvious, but more importantly, the smart contracts can be built to for example, pay out dividends on a regular basis, right? And then the crowd or whoever is centralizing that today cannot tamper with that and cannot withhold those payments from being made on a regular basis. So it's a perfect fit in that regard as well. Ultimately, real estate is the largest asset class in the world. We're not talking about billions or hundreds of billions. We're talking about tens of trillions of dollars. And so if there was an asset class to tokenize and to put on the blockchain, real estate probably makes the most sense.
I guess I agree with both the last panelists. So I got into blockchain because I came from marketplace lending. So I saw that anything like could be securitized, you could tokenize, and I thought there's a real opportunity there, especially after marketplace lending sort of failed and the valuations were getting less, and there's a lot of M&A in the space. So I saw blockchain as kind of the future for that. But now that I've been working and kind of see that it makes sense to really launch some of these currencies if they do work, especially if you have one that's, I guess, scalable and private. But one piece that the blockchain and like Bitcoin and all of these currencies is missing is lending. I just want to point that out. Anyway, I mean, most of the money in the U.S. economy is lent. It's not. So we have to figure out a way for blockchain once we figure out how to bring it mainstream in order to lend on it.
Do you see, like, look into the future, what do you think that looks like lending on the blockchain?
You'd have to figure out the governance to do it sort of like we do it in the U.S. today, to figure out how to determine credit for people, and then how to create something that's like the Fed.
So we're talking about tokenizing assets across multiple different industries here. What are some of the hurdles that we're currently up against? And you can speak like very specifically whether it's financial or whether it's real estate or anything else. What do you think some of those major hurdles are?
I would say regulations.
I'll second that. So in our case, we had the technology all built. We had the customer base. We had everything else lined up, and it took us 2 years to receive the final qualification from the Securities and Exchange Commission. So ultimately, I think that is probably the biggest barrier to any kind of tokenization of any asset class, whatever that might be, especially if we're talking about financial instruments of any sort. I think that will continue to be the case, and not just here in the U.S., but internationally. Now, clearly, there's various jurisdictions that we've looked at. Some are easier than others to overcome these regulatory hurdles, but we're focusing for now, at least, on the U.S. market, and it hasn't been an easy process.
It's a user experience problem. Like, this technology is impossible to use for competent people, let alone for competent technologists, let alone for sort of everyday people that are trying to figure out how to interact with things. Like, the prospect of having to load MetaMask to go buy some token to get some, like, it's ridiculous. And this notion of trying to store seeds for your keys, for your real estate, like, all of that is broken to drive mainstream adoption of all of this stuff. So until we can figure out how to make this technology approachable to everyday people where it doesn't take hours to explain. I mean, I remember, like, who was at Thanksgiving last year when this stuff was blowing up? And, like, the entire conversation at Thanksgiving was, how do you buy how do you buy these alt currencies? And you're like, well, first you go to Coinbase, and then you go like send it to Bittrex, and it takes so much effort to do all of this. That's got to get fixed, and until that gets fixed, like I don't care how great the tokenization is. I don't care how much it solves. Like it's just not going to reach mainstream adoption. And you see that today. Look at the number of daily active users on these dApps. Like they're not there because it's hard.
Well, I'd say, I guess, in addition to user experience, you really need the technology that will scale to mainstream. And I think part of the problem is, and people were on the last panel were talking about it, so like things like Ethereum just really cannot scale.
I think the word they used was sucks. So we can just all say that. Go ahead and tweet that out. Ethereum sucks. Maybe
I disagree with that.
or don't tweet it out. That's great. So
Well, I guess I would say that, like, I mean, you worked in real estate, or sorry, maybe that, but for things like real estate, when you only need to write the transaction every so often to Ethereum, it really doesn't matter. But if you're trying to play a game like in CryptoKitties and it takes you 2 hours to buy a cat, like, it's not fun, and so it just doesn't make sense.
I mean, that's for now, but I believe in the next year, this all will be solved. Like,
I just got back from DevCon. I don't think that Ethereum is going to figure it out in the next year, but maybe.
that's good. We can have an entire.
They
panel
did,
on
and they did
will they figure it out
delay
or
like
not.
the Constantinople that they were supposed to release.
All right. So here's this is a question we have as we're talking about like tokenization, and it's sort of going off of what Pomp said at the beginning of the conference today. Is there such a thing that you guys see as too much tokenization? Are we going to reach a place where there's over tokenization, or do you think we don't really have to worry about that issue right now?
I'll take a stab at that. I think ultimately the markets will determine what that means, right? So if the opportunity is created and there's just not enough demand there, then those products will ultimately fail, and there's going to be other products that will be introduced, and I think that's ultimately what's going to drive the different industries and the supply of tokens being offered as a supply and demand.
I mean, I think that's spot on. And it's like you look at some of the content today talking about like A&W token. Like, again, like why the prospect of having to collect and store and manage all of those, whether they're in individual wallets or they're ERC20 tokens or whatever it is, like it just is, it's too much work. And so that piece by itself will sort of, I think, help inform the market decision. It's got to become it's got to have less friction than exists today. And if it doesn't, then I think we do hit this point of saturation.
And I think even when it does, though, have less friction, like the economics have to make sense. And a lot of the economics for different, I guess, tokens that are coming out, like, don't really create an economy that will work long term.
I mean, it's kind of like gift cards, right? Like, who has that wallet or that rubber band thing in your drawer with 786 gift cards you've collected over the last 15 years that have like half have expired, or like the cards for the grocery store? Like, it's the same problem. Having all of these individual things, it's like it might be nice for the brand. The brand might be able to get information about a particular user, but as a consumer, like it's not helpful. It's not a good experience.
I think we're going to end up trying to tokenize everything until we find what works and what not, and then go from there. Just a human thing.
All right, so I wanna take a second and sort of look back a little bit and see like how things were, let's just say a year ago or even in January. What are the differences that you see in capital markets? It can be here, it can be it can be in Asia, it can be in other parts of the world. But what are some differences that you see, say from January to now, and then on top of that, where do you see that going? Where do you see some, are there particular regions you see that are going to lead the way on blockchain disruption in these markets?
So I still see Asia is leading, and yeah, I still see Asia is leading the market, especially Singapore. They are moving faster when it comes to like regulations, and a lot of good projects are coming from Asia as well, and also trading, games card, and all of that. They have been doing that years ago, so it's not new to them, and that's why we see a lot of more adoption, especially in the gaming industry, coming from there.
I think that there's two things that I would comment on. So one is the lack of interest in new tokens that don't generate real value for the consumers, right? So we've seen this with the ICOs that are no longer as popular as they were a year ago or 2 years ago. They're the companies that are trying to issue them are not able to raise the funds. So that's on one side of the equation. On the other side, I think that there is a lot more competitors going into each vertical, and we've seen a lot of companies here on the panels earlier today that there's a lot of interest. People are learning about blockchain in general, about cryptocurrencies, and so there's more and more use cases, just like in Silicon Valley 20 years ago. Now there's a lot more use cases that people are thinking of and entering every space, be that our vertical, which is real estate, or healthcare, or any of the other panelists that we saw earlier. What's probably going to happen in the course of the next several years is there's going to be some leaders in each of these spaces that are ultimately going to drive more innovation, and the winning business models will continue to thrive, whereas the losers will probably fall by the wayside.
I guess I would say, like, specifically since January in Asia, I think things have cooled off. I mean, there's still a lot of good projects coming out, but I would say, especially in the private markets, given the Chinese regulation, a lot of projects moved out of Hong Kong, and a lot of it's harder to launch an ICO in China. That said, and it's harder to get the valuation. And I'd say in January they're high valuations, and they stayed high through about June or July. But things shifted really quickly, at least in Asia. But I think overall, if you have a good project worldwide, you'd still be able to raise a lot of money in crowdfunding or in the ICO.
I mean, I would say euphoria has moved on to depression. Like a year ago, you couldn't get accounts at exchanges. You couldn't get accounts at OTC desks. You couldn't get, like, our bank. We were in March, the last bank account they issued for a period of time while they kind of shut things down to catch up with their backlog. That's not the case anymore. Like, every OTC desk is clamoring for additional counterparties. Exchanges are, like, every exchange you can get accounts for. So on the infrastructure side, sort of this last year, and particularly Q4 of last year, all of these infrastructure players experienced this surge of volume that was unprecedented and unexpected, and it broke a lot of things. And they've now, with this sort of this depression, and it really is, like, you go to these conferences, you go to these events, like, everybody's solemn based on this price action. But that's when things get built. Like, it's these periods of times when things aren't, when you're not trying to put out fires and everything's breaking and you're, like, closing down registration. Like, this is when people buckle down and get the next generation of technology built. And I think it's exactly sort of what you're mentioning. Like, through this period, you're going to end up burning out a bunch of the companies that either didn't have something differentiated or unique, or were raising capital for the wrong reasons, or just don't know how to operate a business. Like, it's a lot harder now in these markets to raise capital. Which means that the companies that have capital or need capital, you're going to end up with sort of the cream of the crop that survive this period of time. And as we come out of this this atmosphere and we come back into sort of the next period of growth, you'll end up with a series of companies that are better, stronger, better prepared, et cetera.
One question I do have, and we started talking a little bit about ICOs. I like that I was on a panel a couple of weeks ago with Ari, who mentioned that there was a bunch of 2016 vintage ICOs and 2017 vintage ICOs. What does 2018 and into 2019 actually look like for ICOs?
So I still like the companies who go there and figure out first the idea, get an MVP, raise a small amount of seed, get to the product market fit, build something, stay there for like 3 years, and then if they need a token, if they need to grow the community, they can do pre-sale or ICO or whatever. But and I only saw a couple of these projects doing that, and like till now, they have been doing great. They're still building, but the crazy stuff that we saw in 2017, and just everybody raising on like a white paper that you can do it on Fever for like $5. I don't see. Yeah, I'm glad we don't see this anymore. People are becoming more sophisticated, so.
I think I'm cynical on the whole ICO marketplace in general, largely because I think if you look at sort of the leading ICOs, like how does the process work? Well, you get a bunch of sort of sophisticated elite funds or venture firms that have first access to these deals. They get all these enormous discounts on these tokens. The sale goes out. Then you have the kind of the consumer access who's paying a 3 to 5x premium over what the original tokens were sold for. Then they ended up getting listed on some exchange and the things get dumped. And you look at a bunch of the funds that exist in this space, like the venture funds or the hedge funds that are specifically focused on crypto, there are a significant portion whose entire business models are made flipping ICOs, which is like, that's fine to me to some extent. Like that's the venture capital model. You make early bets into companies and those companies succeed and then you reap the reward from that. But the reality is in the ICO flipping world, like that period from initial bet to succeed largely has nothing to do with the movement or the progression of the company and has more to do with where is the token available to dump. Like which exchanges are these things listed on? How do other people get liquidity and how do you build sort of excitement around that? It's a very different process, and I think it became very popular because last year it was so easy. Like it was ridiculously easy for people to raise capital. It's still, any entrepreneur will tell you they'll take the easiest path to get capital into their company because that's the worst part of running a business is trying to get the capital you need to operate it. And so if there is a path to do that that's simple and relatively painless, like that's the path you'll go down. It's no longer as simple or relatively painless, and so I think that's why you're seeing a lot of it change. But I'm skeptical on the whole model.
I mean that's why I advise a lot of the projects to, especially when it comes to like early stage VCs to get invested at least 4 to 7 years, just to make sure that they don't dump these tokens on retail investors.
You could think of tokens in a project as sort of dilutive equity. So when you're selling the tokens in that project, you don't want to give them all out to VCs that are just going to dump them, or different other companies. You don't want to give out huge discounts, and you don't want to give away too much of it. And I feel like in this space, there's such a precedent for it now that I get approached by advisors all the time, given we have a blockchain project, looking to help me for free, but not really for free because they want like some crazy amount of tokens, which is just insane. Like no advisor in a startup would get 2% like after the company has been through all the rounds and then hold those 2% of the equity. But in blockchain, I mean, people think 2% is on the low end for what they should get. So I think those expectations will change. I do think the ICO is still a good way to raise money and acquire customers at the same time. And a lot of the projects that have just raised in San Francisco and sort of have different ways that they want to distribute their tokens, I think they might have a harder time because they didn't do an ICO. So I think an ICO done right and kind of making sure that those tokens are spread out around the world would still work. So maybe people are looking at doing like at least less percentages now, and as advisors and everyone in this space. That's it.
Awesome.
So just if I could comment real quick. So I think that a lot of the venture funds that you were mentioning earlier are not traditional venture funds. They're not looking at the long term of the company's well-being and hoping for the company to then eventually get acquired or go public. The interest is much more short-term, speculative, and so I wouldn't even call it necessarily a venture fund in the true sense of the word. It's more of a hedge fund or a highly speculative short-term investment. It's a pump and dump type of scheme rather than a real traditional investment the way that we all understand venture investing. Overall, I'd say that ICOs are probably going to continue slow down and really will truly be replaced by STOs, right? Security token offerings, I think, are going to be the way of the future. Personally, I don't know if other panelists will agree. I think that that's what the consumers will demand in terms of buying these securities, that they will demand more regulatory oversight, they will demand more transparency, and that's what an STO ultimately provides.
think next time I go to the casino, I'm going to call my bet a highly speculative short-term investment and just make myself feel a little bit better there. So, all right, we have time for just a couple of questions here. So does anybody have any questions? We got one right here in the front row. Riley's running.
I'm confused about the ICO, ITO, the entire idea. It's just a copy of an IPO. And the reason we do that is because we don't have access to NASDAQ or a public exchange. In the cryptocurrency, we do. All of us can get our token listed on day one and be public on day one. Why the ICO then? Why don't we just go directly to public and have the public exchange set the price?
So I think, I mean, if you were, like, I guess it depends on what you're doing with your ICO. So if you wanted to do, like, an ICO for, say, Bitcoin, but you did it with equity, the whole point of it is for people to be able to trade those tokens back and forth, or Bitcoin back and forth across the world. You wouldn't be able to do that with equity in the same way. You'd have to go through different exchanges. So their product, if it makes sense to be done in an ICO versus like an IPO, depending, like, as a way to distribute the product.
All right, any other questions? Anybody else?
Everybody wants to go drink.
Yeah, let's give them a round of applause and get one step closer to that.